There is a clear consensus right now. Inflation is on. The question is, where do we go from here? You came here for the truth, so let me unveil that for you. Today, the main focus is inflation. I want to look at this from all angles. I'm going to bring it together, how you can actually be aware of it, what you got to do as an investor in the Money GPS Insights. I know a lot of people have been really saying that this has been the best addition to the channel so far, so I'm definitely going to be continuing it. I want to look at what's been happening all across the spectrum. We're going to look at everything from used car prices to, of course, food and stocks and housing and everything else. I want to try to get it all into this video. Let's begin. But it wouldn't be a Money GPS video without a balance sheet update. Look at it. You can see the Federal Reserve's balance sheet, $7.922 trillion. It continues to increase, thankfully, because we need this bubble to inflate further and further and further. And along with that, we see the stock market that has really, truly benefited from all of the money printing indirectly. It doesn't have to be direct, you know, the way it works. So this is just showing you, as you can see towards the bottom here specifically, I was going to highlight the S&P 500 index, looking at the PE ratios as of May 21st, 2021, 37.11. Unbelievably, a year ago, 25.56. Okay, this is something that you can see over a period of time, looking at the PE ratios as one simple indicator to determine where we are at. Is this a bubble? Is this a little overbought? Is it oversold? Is it something that we should be staying away from and going to undervalued assets? All of these questions are for you, of course, to answer, but I can show you the statistics and we can get a general consensus as to what's happening. And today, clearly the valuations are stretched, but because of what I just mentioned with the Federal Reserve, that has made all of this possible. So according to Goldman Sachs, and by the way, Jerome Powell and the crew, these distortions that we have today to the core inflation, that's what they're calling distortions, should peak in April and May. Others I have heard talking about it through the summer and then into the fall, it's going to decline. I've heard the June, July time frame. I don't know. Okay, I don't know when this is going to peak, when it's going to fall, if it's going to go up or down. But I can certainly talk about this a bit further. I wanted to note something here before I forget to mention it. You are looking at the supply chain problems. You've got some issues there. There's no doubt about it. There's something that needs to be said. The ports, particularly LA and Long Beach, I believe, but you can look at other ports as well. You've got these full container loads just sitting off on the coast because the ports are so busy right now. The ports are unbelievably busy. I happen to know this personally, especially on the West Coast in the US, but I'm sure it's going on everywhere else. So if you've been bringing in products, you know how this is. There's clearly a delay. Whether it's contrived and controlled, I don't know. I don't have any intel on that, but I can tell you right now, there is certainly a delay. So that's causing part of the problem here. You've got products. It's not as if necessarily the products aren't being made and produced and so on, but a lot of times it's simply a matter of getting it from where it originates over to where it needs to be. There's something else that we have to talk about with inflation. I wanted to make this very clear. US consumer price inflation jumped quite suddenly in April. Part of the reason why they're willing to admit this at this time with the CPI or the fake core PCE, you look at this in a period of time 1 year ago, 1 year prior to those numbers, because they're doing year-over-year measurements, it was obviously contracting. So anything that is in an upward direction is going to look very high in contrast to that. That's all I really wanted to note here. If you've got a recession going on, then 1 year later, things are going to look in a much different situation. And that's partly what we had here. Their inflation rate is just never going to give you the actual truth because of the actual calculation and the way that this is done. Here is one of many indexes that you can look at for the commodities. This happens to be the GSCI Commodity Index. Looking through here, you could see what had happened over this period. I mean, May, it's dipped down at this point and pretty much straight through to September. Then we went sideways until November, and then that picked up all throughout, and we have seen two dips in this period here, currently on another dip. Some have suggested, what I'll note right now before I forget as well, is that commodities may have peaked out. That's what some are saying, and that at least short term. And then we have technology stocks or growth stocks that haven't been doing that well recently, so this could pick up as a result. And that's just the trading back and forth. This is just something that in the shorter term, we know that the effects of inflation on the consumer are clearly here, and they're here to stay. We'll talk about that more in a minute. There's this Wall Street Journal article here where they get into a little bit of the history and so on, but I just wanted to mention something really quickly. Inflation forces investors to scramble for solutions, because no longer is the whole invest in the, the FANG stocks, the growth stocks, and you're going to just make money forever. At least in this short period of time, that wasn't 100% of the cases. Pickup in consumer price momentum leaves tough choices in assets like gold and Bitcoin. And you could see the performance of gold over the last little while. Clearly, there have been concerns about inflation, and then you see more money moving into gold. But this is nothing like what we had seen in previous instances with the demand for gold. The demand for physical gold is absolutely there. It's always been there, but you got to look at the ETFs and so on, where a lot of the paper gold is really something that's always in flux. And I always believe that we don't see a real rush to gold until everything else has failed. So perhaps we'll see that in the near future. Who knows? So let's cover the points right now. Number one, inflation is expected to remain high for at least a few months. So no matter who you are, Goldman Sachs and JP Morgan or the Federal Reserve or anybody is basically suggesting at least for the next few months, inflation is going to remain high. If that's the case, we can, arrange what we're doing, whether that's our investments or our personal life, aspects here. We could make adjustments based on that. Number two, we need to understand that there could be real deflation. Many have suggested we will get real deflation after this. If the Federal Reserve, if the government wants to prevent that from happening, they can offset it with helicopter money. Okay, I'm talking about handing out money left, right, and center more than they're doing right now. I'm not talking about quantitative easing, I'm talking about actual handing out the checks, because people then they go spend that into the economy. And then we have number three, and that is, in this short term, keep your inflation strategy intact. I think it's important for people to understand that in this period of time, the general consensus, pretty much everybody on either end of the spectrum is suggesting this will continue, but we're going to keep a very close eye on it. Listen, if you want to get all of the detail that I talk about in my videos, you cannot rely on opening up this page and trying to see, do I come up in the suggestions? I can't even say the name of the platform. My goodness, the way that the algorithms pick it up. Anyway, we need to get around this. This is the very first step, is me creating this email list, the insiders, and that's going to allow me to get to you directly. It's so important that you sign up for this. It's free. I created this so I can make sure that I am getting to you directly. It's available at themoneygps.com. You're going to get an email from me with this video 5 days a week. You're going to get the video of the day, and then at a later date, I'm actually going to create content around it. It will be a newsletter that you can take advantage of, again, absolutely for free. Now, looking at the Google Trends for rental car shortage. Taking a look at this, I mean, unbelievable. Rental cars, yet look, a year ago, Hertz couldn't get rid of their cars. They were so desperate because the company was failing, going bankrupt, and they needed to make back some of that money. So what do? They started, a fire sale, basically. Record price swings in the April CPI report. This is just showing you used car truck prices jumped by a record while rental prices nearly matched the high in June. This is going on like crazy right now. Core CPI components with the biggest percentage month-over-month changes in April and their contributions to the 0.9% pop in core CPI. Look on the left side. Used cars and trucks is the highest by far. The Manheim Used Vehicle Value Index, no, that's not a Bitcoin chart. No, that's not Ethereum. That's not tulips. You're seeing used vehicles. I mean, it's crazy to see how far this has come up, and it's used cars of all things. Normally, you wouldn't think of it as an asset. I mean, this is clearly a liability, but somehow a used car is flipping on its head. I mean, this is truly an unbelievable time we're living through. Retail inventory to sales ratio. Very interesting stat here. Just shows you the actual inventory to sales ratio. Not necessarily just inventory, but it has been declining nonetheless. Okay, looking at the NFIB, small business sentiment, inventories and prices. Record high share saying that inventories are too low and sharp gain in those planning to increase selling prices. That's the one I want to touch on. Okay, it is something that is clearly, very clearly increasing as we move through, as we move on. Why are they going to increase the prices? Because of course, if they're making peanut butter, as we covered in a previous video, the peanuts have gone higher, the shipping costs are higher, they have to pass that on to the consumers. They're not going to take a cut from their profits. Just not going to happen. Companies aren't going to do that. So what happens? They increase their prices, or they shrink the containers, or they leave the container the same size, but now instead of, the bag of chips is, however many grams is on there, or 1 pound. I don't even know how, I haven't consumed those in about 15 years. But anyway, it's just less and less and less in the bag, and it's just a bunch of air. I mean, that's what they do. And people are saying, no, there's no inflation here. I remember in 2019, before we got into this, there's no inflation. I've been buying the same things every year. You can't tell me anything. Yeah, but there's 6 chips in a big bag like that. Anyway, whatever. Last thing, Fed prepares to go direct with liquidity. I don't have time to get into this, but I think this is something really important. I just wanted to mention it here. Because of what's happening with the repo crisis, you've got primary dealers, whether it's JP Morgan and so on, that are in between the debt monetization that happens today. What if the possibility that they don't need the primary dealers anymore, and they simply run this garbage scheme that they have all on their own? Of course, that control there, I don't know how they're going to be allowed to do it, but if there's a crisis that they need to do it, maybe, just maybe, they're going to take control of that as well. That's all for this video. If you found it informative, hit the thumbs up button. I really do appreciate that. I don't talk about my free course very much recently, but if you want to check it out, it's free. The Amazon e-course, you can learn all about e-commerce in here for free, the amazongps.com. If you're interested in the financial system, the way it works, all the details, the foundation, how to make money, everything is in these two. Check them out at the link in the description or at themoneygps.com. And if you have not seen this video yet, don't worry, because very few people did yesterday's video. Check it out if you can. Click it, and I'll see you there.